The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 18th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we'll go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is they're communicating to us at just past 1 on the East Coast in the afternoon on this wonderful Wednesday. Of course, I am grateful for your presence here. Most importantly, though, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. Internationally, 727-445-1044. You can send me an email, steve@tfnn.com. I'll do my best to get to that. Of course, inside the Tiger's Den, you can just instant message us. And we will go ahead and take care of your request. On this wonderful Wednesday, of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 139 points at 17,628. S&P's up 16 points. She's trading at 2,067. NASDAQ Composite up 46, trading out at 5,032. The Russell's up 8 points at 1161. The DAX closed down 11 points last night. The FTSE closed, or this morning, I should say. The FTSE closed up this morning at $10, up $10. Gold is flat at trading at $10.67. Silver's off 10 pennies at $14.06. Light sweet crude back 38 cents, trading at $40.29. Speaking of light sweet crude, tomorrow evening at 6:30, our man Andy Heck is going to be putting together a workshop. It's called Crude Oil Prospects, coming into the December 4th OPEC meeting. This is a workshop that you want to attend. It's a real easy thing to do. Come on over to the homepage of TFNN.com. Over on the left-hand side, you'll see the workshop event. It's for subscribers only. So that's really a bonus because you can test drive Andy's service for free out there for the next 30 days. Plus, you get this bonus of this workshop. So don't delay. Come on over and sign up for that right now. We'll take a look at light sweet crude, which is traded at $40.29. Natural gas back a couple of pennies. Copper's down a bit. Hey, lead the charge to the upside out here. We've got Priceline.com up $25, $26. Probably a little counter trend rally. We'll take a look at that. We know we've got inside Priceline that very bearish island reversal top that it has made at the all-time highs out there. Amazon's up $13 at $6.56. Allergan is up $11. That's up about 3.5%. Regeneron Pharmaceuticals up again this morning. That's trading out at 5, or this afternoon, I should say. It's trading out at 5.80. The Canadian Pacific Railway, they're up $7. We've got them and Norfolk Southern going back and forth trying to put together a deal. Biogen is up about $7. The downside, Equinix down nearly $11, 3.5%. China Biologic Products down 7% off $8. Citrix Systems off $7. Qualcomm down 8%, a little over 8% off $4. But let's begin the day. Let's take a look at what's going on. We'll just switch back and forth between maybe some daily and some intraday charts. So at 2 o'clock, we've got the Fed minutes will be released. The market seems to be trading as if there's not going to be anything unusual in the Fed minutes, and that's probably the case. If we take a look at the Dow, which is up 143 points, what the Dow did back on Friday was the Dow came all the way back to the level where it had broken out. Now, that breakout was on, don't pay attention to the volume on my screen out here, because when it comes to the Dow, that is not accurate volume. But what I can tell you, if we just take a look at that wide-ranging bar, we'll use the wide-ranging bar as a breakout level. That was October 22nd. The low there was 17,000 something, 17,180. What was it? 17,180. And price came back on Friday, came back to the level of 17,238. Remember, we use these breakout areas. We kind of use it as a range. And so price came back to where it broke out. It did it with light volume or similar volume. So it did it similar volume. So it wasn't heavy volume, both on a daily and a weekly. And we just simply use the Dow Diamonds to use as our benchmark for volume out there. Now we've had a nice move off of that bottom. Now, you can also see a couple different trend lines. First, the rising trend line just simply off August 24th. That has not come into play here as we speak. Doesn't mean that it won't. There could be an A to B equals CD to the downside. In fact, there will be, unless the Dow is able to go ahead and take out its resistance. Now, it's a very short-term resistance line, but it's the only one that's out there. And that's just simply using, we're not creating a little price channel out here. We're just using a trend line. That's using the high of November 3rd. We can see all the different touch points. So the Dow has a bit to go, a bit further to go. 17,750 or so probably gets you up to the top of that trend line, maybe over it. And if it does get over it, then we might have an A to B equals CD to the upside that is setting up. So that's what's going on inside of the Dow on the daily chart. But if we take a look at the Dow, let's look at it on the 30-minute. We're looking at the Dow futures now, because that gives us great signals out here. And looks like let me just make sure of this. I'm pretty sure that's the case. Yeah, in fact, I already know that's the case. I don't even need to do that. Sorry about that. Let me do this. So the lowest low, here's what we know. Let me get my cursor out here. Sorry about that. What we know is the Dow was moving higher into about 12 noon. Let me see what that date was out here. That was on November 17th. So today, where was today? November 18th. Okay, so that was yesterday. So moving into about that 12 noon time frame, we know that price was moving higher, doing it with less relative strength out there. That's why we've got those black diagonal lines drawn between swing points or between candle sessions out there to make us aware. Nice little bearish engulfing at 12:30, some follow through at 1 p.m. Now, price moved down into the low, ran into, looks like the bottom of its 30-minute TAS market profile, formed a hammer candle. This was at 3 o'clock yesterday afternoon, signaling to both you and I that there was some support down there. So you had support both from the candle perspective and from our TAS market profiles. Of course, price just really traded sideways from that time period all the way up into the next hammer candle that took place here at 5:30 this morning. And really, to a certain extent, coming all the way back here to yesterday's low, if we go from that low all the way up to the most recent high, we're in a sixth wave to the upside on the 30-minute chart, perhaps number 7 to occur for us. But if we take a look at the 120-minute time frame chart out here, this thing says, you know what? Maybe it's got even higher to go beyond that. So maybe the 30-minute chart out here inside of the Dow futures contract. I mean, there's nothing out there inside the Dow futures contract on a 30-minute and or a 20-minute here that suggests that the market is going to, if we were to use the Dow as a signal, that the market is going to respond negatively to the when the minutes get pushed out here. If we go take a look at the summation index inside the Dow, see what it is doing right now. Of course, I have another trend line here inside the Dow. So we took a look at the short-term trend line. Here's the longer-term trend line. That's the one that goes back to the all-time high out here from May 19th, and then you can use as your next touch point July 20th. Of course, we know that price did get above it, came back below it. Right now, it's bumping its head right up against that level, that area. So you've got a little bit of resistance. If it can clear that, then it says it goes up to that shorter-term trend line that you and I took a look at. Now, this is the price oscillator is still below zero. I haven't looked to see how many of the Dow's images, what the heck am I talking about? How many of the Dow constituents is in positive territory? Maybe I'll do that during a breakout there. But the bottom line is still is the bears that actually have control of the Dow. I know it may be hard to believe, but the bears are losing control. So that's what's going on as we take a look at the Dow. As long as we're over here, let's go take a look. Now let's switch over. Let's do the same thing. Let's move away from the Dow. Let's go take a look at the NASDAQ Composite. It's up 49 points straight on to 5,035. Here's what you and I know about the NASDAQ Composite. You know, coming off of that August 24th level, we can see we've got both a rising price channel as well as that little rising trend line out here. So price inside of the NASDAQ, in fact, it's more clear here than it was on the Dow chart. We had that gap up on October 23rd. Price came right down. That's a level of support. That's a breakout area. Remember, we talk about this time and time again because I want you to make sure that you get this, you know, that make sure that you put gaps in proper perspective. Because if you go ahead and you fill in the gap, meaning that price opened up at the very next trading session where the close was the prior day, and you just drew that and shaded that in, you'd see a wide-ranging bar. And what would be your opinion of a wide-ranging bar? That price is going to come back and fill it? No, that's not. You would be looking for price to come back to fill it, to get down to the bottom of that wide-ranging bar. Why? Because that's where price broke out. That's exactly what took place inside the NASDAQ Composite. It comes back to the level where price broke out. Moved quite a bit higher. Nice little bullish engulfing candle that formed on November 16th. A little bit of sideways movement as it ran into resistance inside that gap down that created that island reversal. Of course, Gilligan, Ginger, Marianne, the Skipper 2, and even Mr. What were their name? Thurston Howell the third out there. They've all been rescued. There is no island reversal inside of the NASDAQ Composite. The Composite now trying to get up into its little short-term descending trend line, probably around the 5,088 type level. You're at 5,031 right now. However, the NASDAQ, if we take a look at its 30-minute chart out here, on the 30-minute time frame, this says maybe not so fast. Now, that could change here between now and 1:30 because it has a, well, you know, if we just take, there's no price relative strength divergent pattern as we had back here. You know, if you have that going on at the same time while you're getting up to these upper level wave counts, then you've got to, your sphincter muscle ought to get a little bit tighter out there. But at this stage here, it's just a cautionary sign as we speak on the 30-minute basis. And we look at the 2-hour chart out here. The 2-hour chart says what? It says maybe you're in a seventh wave to the upside, but I don't really, you know, we're above all kinds of resistance out there. And we looked at the daily chart. We know resistance is another 40 or 50 points higher on the daily time frame out there. So nothing here to really be sweating as we speak right now. If we take a look at NASDAQ Composite, we look at the summation index. I don't even recall. Let's go do that. Maybe we did. And if we did, I apologize. I don't think we did. So we're going to go take a look at the NASDAQ Composite. Now, wow. It's getting pretty close to being above zero. The reading is minus 744. What did it need today to get totally bullish out here? 1,242 net advancing issues inside the NASDAQ Composite. Pretty close. If we see that price oscillator get above zero, here's what the message is. We're headed back to the highs, and the highs that we're talking about are probably not November 5th, but the highs out here from the trading day of July 20th out here, and maybe even beyond that. If we go take a look at the long term, though, let me just put up the long-term chart for the NASDAQ. $sign COMPQ out here. And let's see. So the resistance level inside the NASDAQ says price probably heads back to 5,091. That's that weekly horizontal trading range boundary line. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 142, S&P's up 17, Composite is up 50 points. I have an email that came in, and it says, Steve, the way that you talk about that price relative strength divergent pattern, you talk about it as if it's the holy grail. Please explain. Well, that's an interesting question to put out there, but you and I, we take a look at patterns. Now, most people, I don't know what your definition, I'm not referring to this this person who wrote in. Thanks for sending the email. But you know, I believe the definition of the Holy Grail is that it's designed to provide happiness, eternal youth, and food in infinite abundance. And so then I guess it really is a version of the Holy Grail. Let me show you what I mean, and really how I came upon it out here. And it was, my search began, interestingly enough, by taking a look at all of the different planetary aspects. So I went ahead and I digitized the ephemeris out there. And the ephemeris can give you the exact date and location and angles of planets. And so I went ahead and digitized it. I've got 300 years worth of data, so I can go back and back test it. The idea was that maybe at important tops and bottoms, I could find the one thing that always was there to provide that information. Unfortunately, that one thing wasn't there. And I searched and I searched and I searched. I could not find consistency out there. However, while I was doing that, I also happened to have the relative strength indicator, which I like to use. In the original days, it was just really looking for overbought and oversold levels out there. But I noticed something. Let me show you. Here is as a matter of fact, here's my oldest file that I have for that pattern. This is the Dow. Now, it's not live. This is a data file that goes back to 1896. All right, so I've got, I don't know, 1896. How many years of data is that? 120 years of data, basically. So the bottom portion of my chart, is a tool that I developed for that to identify divergences out here. Now, the reason I've got a red line on here, so we're just picking up the candle closes, is because you'll see as I get back into the 1800s, early 1900s, the open, high, low, close. Now, all this was taken from a great website that is, they're out of Poland, but all the data is legit, taken from newspapers and so forth. But you can see here when the most recent high that we made, so that black line that is on the screen, I don't think I can really darken it too much, but if you're watching this here on Tiger TV, this is where price was moving higher, doing it with less relative strength. That led to the price pulling back into the breakout areas that you and I have already covered. But let me go ahead and pull this back, because what I did find was I found that this was the most consistent at calling every single, not every single, well, pretty close to every single major market top and bottom out here. And it's just different time frames. Sometimes it shows up on the daily, sometimes the weekly, sometimes the monthly. So I run those charts. I always have those charts off in the background and take a look at it and understand what's going on. So this here, you can see, if you're looking at the bottom of my screen, you can see I'm at September 11th, 1896. Now look at this top that came out here. November 13th, looks like 1896 out here. Now, at that stage, the Dow was at $44.81. That called a nice little top, didn't it? We see price here having moved down. Now sometimes people ask me, they say, hey, I see these lines and I see price continuing to move up. Well, if I were going to really define the holy grail for you, and it would really be the holy grail trading strategy, it's understanding that you have to put together any pattern that you trade with Japanese candlestick charting out there. If you don't, you're going to miss the boat, or you're going to do the right thing at the wrong time and absolutely get crushed out there, because the market communicates to you and I. As Tom likes to say, it likes to squawk, walk, and talk. Well, it likes to talk to us by simply giving us candlestick patterns out there. And you've got to know which ones to use. Many people misuse them. The combination of those two will go ahead and provide food in infinite abundance forever and ever. But take a look at the, here's a pattern that was present. This is back in 1897. As an example, what does price do? Price goes ahead and moves lower. Take a look at this bottom. Probably a lot of fear out here back in 1898, March 26. What did it do? It created a price relative strength divergent pattern out here. Now, I teach this. I haven't done it in a while out there. Maybe we'll put together a workshop here in the not too distant future for you. But what you can see here, take a look at this nice high back in 1899. Are you getting the, and now take a look at price moving down into a low out here into June of 1899 as well. Take a look at the pattern that was present. Yes, this was present back at the highs in 1928 as well, 1929 before the crash. I mean, just all along the board. Take a look at this nice little bottom that had formed out here in 1903. You kind of get the picture. So this thing has worked basically as long as data has been tracked out there. Now, unfortunately, Wells Wilder wasn't born back in the 1896 time frame, but he must know. He should want to know. Well, of course, I use it a little bit differently than he teaches. It's a great tool, folks. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 130, S&P's up 16 points out there. You know how when I begin the show, I talk about how there's really a gift in every set of circumstance. And nothing could be more proof of it. It happens every single day. You know, take a look at it like this. I began that journey where I had spent, number one, I spent a good amount of money to go ahead and to get the digital file of the New American Ephemeris out there. So I did that. Then once I had that, I had to pay a programmer, because I myself am not a programmer out there, pay a programmer to write a program, a custom program for me to be able to take that data out of this database, out of this spreadsheet, so that it could automatically be integrated into any stock chart that I wanted out there, which I did. Then and those costs, that money was nothing compared to the amount of time that I had to invest to then go ahead and start pulling all of the different planetary aspects, those ones that were supposed to, that were present, for example, in 87 and other tops and crashes and things, and start to look for similarities out there. So that required a lot of hours and a lot of work. So the money was nothing compared to the amount of time. So imagine, you do that because you've done this before, not for this exact same thing, but you know what I'm talking about out there. And you get to the end of that line and you're like, I've got nothing. I did all that, and I've got nothing. I don't have the edge that I was looking for. Of course, the gift was that had I not been doing that, I wouldn't have found this other pattern that is present at all of these major market turns, on either a daily, on a weekly, on a monthly. Sometimes it's there on all three time frames that are out there. So there really is a gift in all those set of circumstances. And the bottom line is, not the bottom line, but another line, but another element that came out of that was I was searching for all of these alignments out there to try to provide us with turn dates. And that's when I came up with, I found one thing that was consistent out there inside the market. It's called perigee and apogee. And if you don't, I teach my subscribers how to use that. If you've never subscribed to the newsletter, come on over to the homepage of TFNN.com. Try Mastering Probability out there. And that is consistent. It's the most consistent thing. So again, there is always a gift in every set of circumstance. It's just really up to you and I to figure it out. The easiest way to state it is no matter how thin you slice it in life, folks, there's always two sides to every piece of bread. And that's the way that it is in the market. I know that sometimes I'm on the bullish side and you might be on the bearish side. That's what makes a market. Maybe it's vice versa. The whole idea is for each of us to share ideas, what it is that we're looking at and the reasons why out there. In any event, let's continue on. We took a look at the Dow. We took a look at the NASDAQ composite. Let's go take a look at what's going on in some of the ETFs out here. Let's go look at the Qs, see what patterns we have out here. So inside the Qs, what you and I know. Now, I don't know how the day is going to end, right? Maybe there's going to be a violent reaction to the release of the Fed minutes. I don't know. What would be a violent reaction inside the QQQ ETF series? It would close below 112.07. If it does that, now there's no island top out there, so that is vamoose. It's gone. That's not present. If I take a look at volume, looks to me like from a volume perspective, the Qs do 27 million today. The downdraft was 53 million. So the line of resistance is really, did I say 112.07? I think I did this yesterday too. Really, 111.96 is the actual number. If the Qs close underneath 111.96, you'd have a second day of failure at a resistance line. That happens to be the bottom of the November 12th session. As long as the Qs, I don't care volume or not, as long as the Qs close above 111.96, then price goes and revisits the high out here, which is back from the trading day of November the 4th. That's what's going on inside of the Qs. If we take a look at the IWM, Russell 2000, what do we know about it? The Russell 2000 has been traveling in, a couple of different price channels out here. The Russell 2000, really, in order for it to get going, needs to get above its gap as well from November the 12th. Volume today, 19 million. That equates to about 33 million or so at gap down with 39 million shares. So really not too bad, but it's not up towards the top of that gap, which is 116.49 out here. So far, intra-session high is 115.80, but I don't see anything that is too concerning inside of the Russell 2000. Remember, the Russell 2000 is not going to go ahead and lead things to the upside or lead things to the downside. You want to see it as the leader in both those positions. But what I mean is that it's not strong enough to go ahead and carry the market in either direction out there. But it is a good advanced warning indicator system. If we take a look at the SPYs right now running into resistance. Level 1 is 207.06. You're trading at 207.07. That downdraft, that gap down was 121 million. You're up right now with 48 million. That equates to about 80. So we're looking at a light volume day. But nonetheless, if the SPYs can close above 207.06, says you run to 207.74. You close above 207.74, and you run back to the highs. Now you can see this little quick downtrend line out here, short-term trend line. Prices right now trading above that level. It was resistance yesterday, but this could be just sideways movement. So it's not a trend that I'm going to get. It's not going to blow my skirt up, so to speak, out here. Instead, closing above 207.74, if I did wear a skirt, that would go ahead and blow it up because it would say price is moving back to the highs out there. If we go take a look at the Dow Diamonds, the Diamonds right now, they're trading out at 176.54. It's just inside that gap similar gap to what we looked at inside the SPYs. It's above the high of November 12th, which is 176.35. Again, you're 176.52. Volume on that day was 6.1 million. Today, you've done 2.4. That says maybe we do 4 million shares. So you got light volume on the way up. But nonetheless, if you can close above 177.21, that says it too goes back to at least its recent high out here on November the 4th. We got a caller on the line. Let's go out to Tom in Massachusetts. Tom, thanks for calling. Thanks for holding. How are you doing today?
I'm doing pretty well, Steve. How about yourself?
Excellent. Thanks so much for asking. You're calling about USLV. Tell me what you're doing and how I can help you.
Well, I'm looking maybe for an entry point, but I'm hoping that maybe silver turns around here at some point.
Well, I would agree with you. I just don't think that time is just yet. What I would say is, well, I'll give you a couple things. I know you're not. I can tell that you're in the car or something.
Yes.
But maybe what you'll want to do is try to pick up the archive of the show on Channel 9 later on tonight. The first chart that I'm putting up on my screen is the commitment to traders data that the CFTC puts out every Friday. In this case here, it was Monday because of the Veterans Day holiday. Are you a veteran, by the way?
No, I'm not.
Okay, well, I was going to thank you for your service if you were. But in any event, I still thank you for your service and your call. But if we take a look at their data, they were up at these extreme high net short positions as price was moving higher. And that was a signal to both you and I that the move to the upside was over inside the metals. They have backed off of that position, but they are not anywhere down to the levels where silver puts in pretty significant bottoms. So this could be a while before that bottom actually forms out here, but it's not there today. If we take a look and try to get a message from what the smart money, the so-called smart money, the big traders are doing out here. If I take a look at just the SLV, the USLV is the 3-time long silver out here. First, we'll take a look at the silver contract. What it's about to do here, Tom, is it looks like it's going to get down and test the swing point low from August 26th. That price point is $13.95. So far, the low out here today has been $13.99. Gold broke through that swing point, or broke through its swing point, which was July 24th. It would seem to me that silver is going to do the same thing. And I think what you really want to be looking for, what I want to be looking for, is some kind of huge washout. And I don't think that yesterday was it. Yesterday, we saw gold move down below the swing point of its, which was July 24th. It did it with lighter volume. But I don't really think that that's the entire washout that is out here. In fact, silver, if we take a look at, well, I'll go back to silver because you're focused primarily just on silver?
Yes.
Okay. So if I go back to silver and give you, possible places, I mean, this would truly be probably a washout. Let me see where the actual expansion of the set of swing points is, just out of curiosity. I haven't done this, but let's see. And I'm going from the low of August 26th up to the high out here on October 28th. This says silver could get down to about 13.29, maybe even 12.45 out there. And unless you see a sign of strength, unless I see a sign of strength, that is more likely the outcome, that it's in that price range, 13.29, maybe 12.45, where we see some kind of washout, and then you'd want to see some kind of sign of strength, and then or some type of bullish reversal signal, and then you could step into a long position. But I just don't see it being right here. But tell me, is there something else? That's just a quick look at it, relatively quick look at it. Is there something that you're looking at that that I've probably overlooked, or what the thought process on why to go long silver now?
No, I was in it back in the summer there, and then I've just been watching it, and silver's been going down for a couple of weeks now, so.
Yeah, I think the correlation between the metals and the U.S. dollar index is basically in play out here, and the U.S. dollar index is really based on a correlation of 6 currencies, but the primary currency, Tom, is the euro. And if we take a look at the euro versus the U.S. dollar, what it also did, it did this before gold did, so it was really big heads up to both you and I, was the euro went ahead and broke below the July 20th swing point low. Remember, we looked at July 24th inside of gold. So that swing point was broken with conviction back on November the 6th. What that says to you and I is that the euro is likely headed back to about the 104 to 104.59, 105 level. Now, hopefully, that's a level that holds as support. Price gets down there, that's going to put strength inside the U.S. dollar index. While that's going on, we're going to see this additional price destruction inside of the metals, where nobody and their brother wants to buy them. But I can assure you that's the time when, guys like you and I will want to step in and buy it. But I don't think, I think that it's still too early. And with a lack of any kind of sign of strength, I would be really hesitant to suggest that you should go ahead and maybe take that kind of trade. So the U.S. dollar index looks like that wants to motor on higher, and that will that should be some energy inside of the markets to push the metal prices lower as well. U.S. dollar index is probably going to go target the 101 to 102.45 type area as well. So I hope that helps you out.
I'll just sit on my hands for a little while.
Yeah, do that. I think do that, or look to put that money to work someplace else for a bit. Okay.
Thank you, Steve.
Okay, Tom, have a great day and drive safe out there. That was Tom in Massachusetts. And, just the way that everything is lining up, it's lining up really well. Now, taking a look at, you and I know this, right? And we know what the large commercial traders were doing as of last Tuesday. We don't know what they're doing as of yesterday. We'll know that Friday afternoon. But one of the things that clearly they're moving off of their net short positions out here. Now, it's going to take a little while for them to unwind that position, which is another thing that would suggest to me that maybe we're not going to see huge movements in the price of gold and silver, because they're basically natural buyers right now. They've been building that position for a while. And so, maybe the very last thing we see is that scary price destruction out there, that little washout, which would then be the time to come in. But at this stage here, maybe it's not going to. So by the mere fact that maybe price doesn't move a whole lot or move sideways and slightly lower, we have a day like we did yesterday, every now and again. I see that as just would be natural behavior based upon what you and I are taking a look at here inside of the charts. Now, in the case of Goldilocks out there, gold never made it up to the high, less net short position, kind of another way of saying net long, but it's on its way in a fairly fast, rapid way to get back down to the area where it had previously formed, giving us a signal, like for example, back in July of 2015, back in the time frame of about July of 2013 out here. So it's moving its way back into those levels where they are truly less net short, which means more long. And maybe it's at those levels as well. That would be another indicator for you and I. So we'll have a bit more information on Friday. But as things stand right now, no sign of strength, no reason to get crushed to the downside. Because we look at the U.S. dollar index. I don't know what the Fed minutes are going to say in 12 minutes from now. I can't believe it's going to be anything substantial out here. Is all the positioning taking place? And those levels that we looked at for where the euro could fall to, those are just swing points. Price can turn at any point in time out there, but we'll see it. We'll see it because they can't hide. Bulls and bears can't hide. They create a reversal. They squawk, walk, and talk. They speak to us by creating those reversal signals out there. Let's look at some of these. So we looked at the, at the ETFs out here. We're going to be going to break. So in lieu of anything specific that you want to take a look at, maybe we'll take a look at some of these stocks that are moving and grooving to the upside and to the downside. Folks, during this break, come on over to the homepage of TFNN.com. Sign up for Andy's workshop. It's tomorrow evening. Look, you don't even have to be present to win. All you have to do is sign up for it because it'll be archived on your members page. It's tomorrow night, 6:30 to 7:30. Crude oil prospects coming in to the December 4th OPEC meeting. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is up about 120 points or so right now. Leading the charge, the upside here, we've got Priceline, PCLN up $24, up about 2%. Again, nothing more than a little bit of a counter trend rally. Now, hey, tomorrow, if somehow Priceline today doesn't trade above 1294.64 and then gaps up tomorrow, you'd actually have an island bottom and an island top pattern out here. But in lieu of that occurring, looks to me like Priceline probably ought to start heading down towards, I'm going to guess the 1128-ish type area. It's where we had a sign of strength back in the February 2015 time frame out here. So that would be a logical price, an area of support for Priceline. I had a request with regard to the CFTC data. I showed that COT chart out there. You can just Google or whatever system you use for doing internet searches. If you just type in CFTC COT, it will take you to the compressed data out there. But it's a huge file. Here's my spreadsheet out here that I have. You can see, I've got quite a few number of columns. I've got some that are hidden here. I don't want to go break it down, but you can go put that file together. But I've not found anything that's reliable that looks at it the way that I do. Of course, I look at things uniquely, I believe. But you can create your own file, and then you've got to find some way to get it into a charting package, much like I did when I created and I took that Daily American or the Digital American Ephemeris so that I could go ahead and pull that in to charts to look around for signals, something that would be unique out there. If we take a look at Amazon, let's see what Amazon is doing. AMZN up 2%. This thing here looks pretty solid. I don't know when it will come back to the breakout area, but it's got a bunch of breakout areas, AKA gaps out here. But today it's moving higher with about 2.5 million shares. Really no big deal out here. Nothing that suggests trouble in River City as we speak right now. That's in Amazon. To the downside, Equinix, that's off $9, down $3 on the daily chart. Really not too bad out here. Volume is 600,000 shares. Made a high out here with about the same type of volume as to what we're trading at right now. But if this thing ever does fall apart, here's where it falls down to, about the 249 type level. Maybe it's around the 244-ish area. That's ticker symbol EQIX. You got China Biologic Products. You have Citrix Systems. That's down $7 or 9%. Now, Citrix here did create an island top. It's created island tops before. In fact, it had one between the time period of July 29th really through August 21st out there. That ended up failing. So, island tops inside Citrix Systems may not mean as much. Nonetheless, so you've got some good volume coming out of it today, 1.8 million shares, and that says that this could pull back to this breakout area right here, which would take you down to about 65.97 or so. That is CTXS as the ticker symbol. Qualcomm, that stock looks pretty horrible. I don't know if pretty and horrible can be used simultaneously, but we just did it here live at TFNN. It's off about 8%. That's it. Qualcomm has been trading inside this descending price channel for quite some time out here. It's trading below that. What does that mean? That means there's trouble in River City. Now, it may be finding support right here. There is a cluster of swing points from back in 2011, and it's around the 4670-ish type area. So perhaps Qualcomm is about to find some support. Maybe it gets back inside that price channel. If so, perhaps it even makes a move all the way up to the top of that. So, folks, it has been great to be with you. Stay tuned. Our man David White is going to be up next. Don't forget, come on over to the homepage at TFNN.com. Sign up for Andy's workshop. It's going to be tomorrow from 6:30 to 7:30. And Dave will be with you to give you the scoop on anything that comes out of the Fed minutes out there. Have a wonderful Wednesday, and I'll see you on terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.